What's going to collapse first? The party of the left or the U.S. equity markets? What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday, January the 26th, 2020, and here we are. And of course, we can have the continued raging on battle of the impeachment. And of course, you've got, if you would listen to some of the people from the left, you would have thought that Shifty Schiff might have won an Oscar for his performance with his 2.5-hour speech on garbage. And of course, this is the new way, right? We used to have the New Deal. Now we got the new ridiculous of things that go on, and some a total belief system depending on who you are and who you support. And of course, let's all hear it for those who have made their billions of dollars and millions of dollars and who want to now say, okay, well, let's give it away. But of course, I've yet to see any one of the major Hollywood stars or any of those big wealthy people decide to give their money away. Okay. It seems to me that they keep accumulating and keep spending millions and millions of dollars to find ways to protect it. So it's easy to be a sport when you're not giving up anything. It's easy to be a Warren Buffett who says, let's pay more taxes when we have that opportunity. It's easy to say that there was a quid pro quo. Again, it's all a bunch of bull. It's a waste of time. More importantly, it's a waste of money. More importantly than that, it's stupid. I mean, we'll just stop it at that. It's stupid. The simplest solution is this. You want to get a new president? Vote him out in November. That's your choices. Instead of wasting hundreds of millions of dollars on garbage, okay, which is exactly what we are seeing now. Is hundreds of millions of dollars wasted, and of course, aren't we lucky? We get to pay the bill. Okay, so in the meantime, eventually, and if you ask my opinion, this party is so far apart they can't even get close to anything, and you're going to see. I think this is obviously doing some major damage to the left, and I think that the American people are starting to really get fairly frustrated, other than the few very big mouths that are out there. But hey, it is what it is. Markets under a little pressure. Are they going to collapse? Again, we don't predict markets, and when we get to our market segment, we will talk more about what is going on in the markets. But certainly, we're not going to, predict any gloom and doom at this point. I mean, there would be absolutely no reason to do so. I think it's interesting, though, when we continue to talk about the lack of inflation. Interestingly enough, I spoke for a farming group this week, and of course, as I suspected, their inflation, the inflation that we don't have, which is, again, goes back to the idiocy of the Federal Reserve and the rest of the central banking system, who are now trying to, develop a digital currency, not a Bitcoin free market currency, but really a currency to hide the fact of how much money we don't have, of how much debt that is really out there. But of course, as I have said and maintained all along, our costs are going up. Our wages are not going up with our costs, but in the farming case, okay, their product that they're producing is typically going lower in value, and of course, their expenses to put that product in the ground is going up in value. So obviously, if they were making money, they're making a hell of a lot less, and if they were already losing money, they're losing more. Okay, so again, it's a real problem. Okay, when you look at the dynamics of what we see here. Now, is this a repeat of the valuations of 1999? And the answer is no. This is not 1999. look, we know that there will be another market collapse at some point, and we know that there are always going to be similar characteristics, okay? But the extreme we had in 1999 was not the same extreme we're having today, but we're having other issues today, okay? And again, that goes into why do you think that the Fed and the central banks are not letting interest markets free float? I mean, they're supposed to be. They're supposed to be determined by price discovery, but they're really not. Okay. Why do we think we have so much interference, okay, from these people from the glass towers that wouldn't know one thing about real life, okay, or about the most important thing that anybody can have is common sense, okay? They have no common sense. They have no idea. They have no clue. And again, that's what it really comes down to. I mean, this goes back to now, you've got Walmart talking about, giving a higher minimum wage to certain employees. I wonder how that's going to work out if they don't give them to everybody. Is that really truly a minimum wage? And I think this is again another issue that should be decided, okay, by the free market. Okay, again, you can talk, and I'm in a constant argument with a friend of mine, okay, about the tariffs and how were they paid for. And I'm going to ask you, okay, a straight out question, okay, if the tariffs were as expensive as we hear these drooling people on the networks, okay, whether you watch CNBC or you watch Fox or watch Bloom, whichever one you happen to watch, and many of the CEOs up there and start whining about how bad the tariffs are for them. And of course, my contention remains that the U.S., the Chinese currency, the yuan or the renminbi, same thing, has been reduced almost enough or enough in some cases to cover all the tariffs, okay, because you're buying more product. So the real question is, does anybody here believe that Walmart would A, be discussing higher wages for some of their employees, and B, not have raised their prices if they were really paying more for their product? I'd have to say I don't believe they would be doing so. To me, Walmart's a great chain. They're a great American retailer, but they ain't never given anything away. Okay, and certainly they're not going to eat the cost of these tariffs. I mean, they don't take care of their own. Okay, if you have ever done business with a Walmart, okay, when they do business with an outside vendor, okay, it isn't because they need the vendor's help with that product. It's because they want to take advantage of the vendor and get 90 days to pay. So what they want is they want to get free money for 90 days, okay? Because as soon as they decide, they'll just go out, and if they're buying a product from China, they'll just go to China and manufacture and rebuild that same product, okay? This is a fact. That's not fiction. That's not my opinion. That is a fact. Walmart is using their vendors' money to roll on, okay? So again, do you think a company that is that thorough and that thrifty, okay, is going to overpay and not pass that cost on to their customers? And the answer is no. Okay, we've used the example before of Starbucks. Starbucks prices keep going higher. We have no inflation, but Starbucks prices keep going higher, and they never come down. In the meantime, coffee's getting hammered. Okay, so their main commodity that they use is getting hammered. But God forbid they should ever bring their prices down. But why should they? Profit margins are greater. And that is the only way to truly tell score, okay, in the financial world, okay, whether it's tariffs, boom, whatever it is, the way you tell score is by profits, okay? You can go back to the first oil crisis back in the 80s, okay, or late 70s. And of course, they were whining in the prices, and we had to raise them. And of course, oil companies had record profits back then. So again, we're seeing record profits today. So again, I asked the question, do we really think that these retailers and others are so benevolent that they're not going to pass on the cost? And I will say it's a crock of crap. They're going to, if they're truly paying more, they're going to pass. Listen, they're going to raise their prices anyways to get a bigger profit margin, but they have not as of yet. And this is not something that just started yesterday. This has been going on for almost 2 years now, coming in April. Okay, so again, this whole trade war story, again, to me, we're looking at it backwards. The trade war should be, again, going back to free and fair trade, okay, because China will not be buying more goods from us unless the price is right. Okay, they're not buying more soybeans unless they're getting a better price here than they're getting in Argentina or Brazil or anywhere else they're going to buy them at. So it comes down to money. Okay, which goes back to what I say is just an oversupply, and as that dwindles down and we have an event, there'll be plenty of buying. Okay, so again, that is something that also brings interesting, and I find it interesting, and I don't know how truthful or how factual the story was, but about Bezos and his phone getting hacked. Okay, considering that his company is probably, I don't know, are they number one in the world? AWS, their web services. So I find that interesting or almost comical. If he really did get hacked, okay. Again, I know the hacking scheme is a problem everywhere. I mean, and I will warn all of you. Okay, I get emails from every major vendor every day that are scams, that are all they're looking for is information. Okay, never give your information away online. Never open one of those attachments if you don't recognize. And one trick that you can do is when you get an email from, like a phony email from a PayPal, for example, look at the email address that sent it. Okay, most of us forget to do that. Take a look at the email address that it was sent from. If it doesn't say PayPal, okay, because they'll copy the logo. It'll look just like an official document. Look at the email. If it doesn't say the company, it's for sure bogus. But, most things, a lot of people contact you by phone and by other ways. They do not contact you by email for that information. So I warn you all to be very careful about what you're doing when you do certain things like that. Because again, very important to understand where we are. And in today's technology world, people are after your information, okay, because they're looking for a way to steal from you. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be back with more right after the break. What's up, all? Hey, yesterday we did our hedging webinar with using synthetics. If you'd like to see that webinar, class starts on Tuesday. If you'd like to be a part of it, email me at bubba@bubbatrading.com. I'll send you the recording. We're cranking it out. Our equity portfolios and our futures portfolios made new highs once again. So we're having a grand old time. So if you want to see any of those, please go ahead and email me at bubba@bubbatrading.com. And I just did a deal for Wealth 6365. So check it out. In the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And for all your brokerage and commission needs, if you'd like to get some of the best deals in town, just shoot me an email at bubba@bubbatrading.com. I'll help you out and show you where to go. In the meantime, let's get back to Bubba's Bottom Line. Welcome back. It is Bubba's Bottom Line for Sunday, the 20th. It's 2020, but it is the 26th of January. And last week, again, I asked in the opening, are the markets ready to collapse? And, I'll say basically the same thing I always say. I'm long, we're long, I'm not changing, okay? Again, Friday's action was down, but we were down less than 1%. Do you realize that we are less than 1.5% from the all-time highs? So am I going to really be overly concerned from the action of Friday? The market, when it's ready, will start to set up in a pattern that will give you a footprint that will say that it's ready to start to go lower. Okay. Today is not that day. Now, it may go lower tomorrow. It may open lower tonight. And I got news for you. If it opens much lower tonight and collapses, I'm going to be a buyer. Okay? Just for the pure fact that we'll probably get a bounce off of it. My guess is the markets, if they're ready to go down, will open higher, which would be a selling opportunity. But in the meantime, from our mechanical trading methods, we will not be getting short until at earliest tomorrow night. Okay, after Monday's trade. I mean, the market didn't go down all that far. So again, I don't know what the big turmoil is about what happened here within the markets. They didn't go anywhere really. I mean, you had a little bit of a sell-off. I mean, is a market that is going nothing but straight up not entitled to have a less than 1% sell-off? So in the meantime, we are long. We are staying long. One of the indexes is close to changing. And I would say this to you, that if the Russell closes lower tomorrow, okay, then that would probably be an opportunity for a sell. And of course, we will update you on the daily updates if that indeed does become the case. Now, of course, crude oil is getting clobbered, okay, and it continues. It is now tested our low points down to 54. And again, look, we still believe that it's going into the high 40s. Even when I was long crude, I said I still felt that after it was all said and done, eventually we'd end up in the high 40s. I still see us going there. We are short, but for the meantime, a rally back to 56 or 58 would not surprise me here. I would see no reason to believe that can't happen. And again, I think you'll watch some of the overnight action. But overall, again, I believe we will end up in the high 40s. I believe that we will not be changing our signal anytime too soon. I believe that this is a chance for probably a pretty big solid run to the downside. So we'll continue to watch there. And gold, which was interesting, because if we go back to, almost 10 days ago, it was a Tuesday night, okay, gold and oil made the exact same blow-off tops to the upside. Both sold off and were lower the next day. But interestingly enough, oil fell far enough to reverse the signal and get short. Gold only fell to a point and started to go higher. So now they're going in different directions, which only meant to me, again, obviously I thought it would be a short for sure. But again, I only trade the mechanical method, did not short. So again, what does that say to me? Possibly we're seeing a little bit of fear. A little fear buy. Now, I'm not a believer that gold is a protection of anything, okay, other than something like a currency. I mean, I call gold a commodity, a hard asset that is one that will appreciate in value over time, but is not going to protect your equity portfolio. But, of course, now you've then got the bonds, which we are now long bonds, which I always hate being long bonds, but we are long bonds, and that is also an indication of some fear in the market, okay? You tie that in with the dollar, okay? So the fear assets are showing a little bit of strength, which only means to me that there are some concerns. And you add in the VIX, which, listen, Friday's action of the VIX was not, it was not alarming. It was not, showing me that there's a lot of fear. It did spike up and did test a resistance level, okay, and came up. It was up a little bit, but it certainly wasn't up if you were that afraid. But again, you tie in those four asset classes, and that will tell the story over the next couple of weeks. Again, I don't believe that necessarily the top of the market is in yet. Again, when it comes in, we'll be ready. But again, I think what you need to see is how the market reacts now, because again, people are talking about it, which means that there's a little bit of fear out there. And it means, okay, that miraculous trade deal we have has done nothing for soybeans. Soybeans are getting clobbered. And if they break, we're short soybeans. So again, if they break $9, I think $8.80 comes next. Okay. Corn looks pretty good. After trying to break down, corn looks pretty good and wheat looks phenomenal. Again, we look for higher grain prices, and I do eventually look for the soybeans to turn around. To me, this is not, price was never about the trade war. Price is always about price, and we've still got a well oversupplied market. Okay, so that would be the issue, which is why we always recommend that it's just easier to be hedged, and then you don't have to think about it, right? And of course, the meats. Cattle on feed was on Friday afternoon. I don't even know. Nobody's been able to tell me yet what it was. My guess was that it was a bearish report. Our signals changed to short from long. And as I wrote Thursday night, that I thought we were going higher. And then, Friday morning, I saw that the signals changed. And at the end of the day, I still think they're going higher. And I think that report's priced in. But again, I can't fight the mechanical method of the trade. But for now, we're short cattle and short feeders. I think that, we might get a break. But again, if the report was bearish, as I suspected, okay, then it might bring the markets down a little bit. But again, hopefully it'll turn them, it'll get them low enough to pull the signal down and we can get long as they go back up again. Hogs should continue to be in that area of potentially ready to go higher. But we don't know. They haven't broken out yet. They've held some support, and they have not been able to break to the upside. So it's something to watch for, because again, from my own eyes, okay, from my own reading of the market footprint, to me it looks like the whole ag space is going to eventually here start to go much higher. But again, I will not fight the mechanical methods of which I trade by, but it is some concern and something that you should be looking at. Okay, so again, we've got falling interest rates. We've got the Fed and central banks talking about digital currencies. There's a lot of issues out there. Okay, there's a lot of pressure out there on certain things, and you've got some big reports. So you've got the Fed this week. You've got the euro currency on lows. Okay, not seen, and of course, I believe the euro is going back under par, which is back under a dollar, obviously pushing our dollar higher. But will they pull? Well, now the new Super Mario will now be Christine Lagarde. Will she be able to turn something around and pull a rabbit out of her hat and change? So again, a lot of economic data this week, that will directly affect things. We'll see what that all comes down to and how it all looks. In the meantime, for now, nothing changes. Okay. I gave you all of our positions the way they sit. I would not change them. I'm not telling you that things are going to change. It's the way it is. In the meantime, we're going to step out of here for break. This is Bubba's Bottom Line. It is Sunday, January the 26th. We will be right back after the break with my commentary. So, kids, again, yesterday webinar, great on using synthetics and leveraging up your portfolio without a lot of risk. Micro and mini. The next big thing, we did that webinar on Friday. Again, you want a recording of either one of those? I mean, A, we're offering some special pricing, but B, these products are on fire. En fuego, okay? And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. In the meantime, we do have places for you for your brokerage. A couple recommendations we can make. If you want to email me at bubba@bubbatrading.com, I'll be happy to share those with you. But we've got some great pricing and some great deals. So in the meantime, we're going to get back to Bubba's Bottom Line and my commentary right now. Welcome back. It is Bubba's Bottom Line, and of course it is my commentary. And since there's no football tonight, next week is the big game. Of course, we were once again 2-0 last week. Okay, so we're finishing the year off with a bang. And interestingly enough, as I mentioned earlier, with the Fed talking about going to digital currency, and now these commercials that I've been watching from Equifax or whichever credit rating agency, how to bump your score immediately by 8 points or whatever. To me, that's one of the things that spells doom. Okay, you've got some 40 million people now that their credit scores are going to change like magic. Okay. Now, again, that to me is doom. There used to be, before information flowed so fast, you'd look at a headline and you would kind of get an idea that a market had bottomed or topped based on the headline. Well, again, we're so long, but I think you're seeing some things out there. And again, this credit score thing, which what's going to do is going to allow the banks to lend and get involved with some more of that subprime type of lending. Okay. that is, to me, the biggest telltale sign, or as in the poker room, you say that's the biggest tell that there are issues there. We know for a fact that the banks have been buying an enormous amount of ugly notes to begin with, but now you start pumping up some credit scores that could not qualify for loans. Now the banks can go ahead and qualify them out and loan out more money. So as we've said before, don't kid yourself. The banks, not only does the Fed print money in the central banks, but the banks print money because they're lending out at 10 to 1. And again, I would take a big wager if I could get an honest count, which I can't get. Okay. But those stress tests, in my opinion, are the biggest crock of crap to begin with. And not too many banks could really pass a true stress test by an independent auditor. But those are warning signs that are screaming to you. Now, again, it does not mean sell out. It does not mean close your positions. It just means keep more careful attention. Because when they start making exceptions and they are going to boost credit scores, okay, out of nothing, okay, all that means they're trying to be able to justify lending out more bad money. We know that has never worked in history. It is not going to work today. And this is Bubba's Bottom Line. And as always, we thank you for being a part of the show. We will have our Super Bowl prediction next week. Okay, we are leaning towards Kansas City at the moment. Also, sorry I missed an update this week. It was too hectic on the road. But in the meantime, we will see you back here tomorrow with Bubba's Daily Update. But for today, enjoy, relax. It's Sunday, no football. Have a nice day. Enjoy your friends, family, and we'll see you all tomorrow with Bubba's Daily Update. Have a great weekend, everybody. This is Bubba's Daily Update. Bubba's Bottom Line for Sunday, January 26, 2020. Have a great day, everybody. We'll see you later.